Hey guys, welcome to another Damilola Forex Academy teaching where I'm going to be exposing you guys to the Fibonacci. The Fibonacci is one of the most important tools that every single trader needs to know about, because with the proper knowledge of the Fibonacci, you can be able to have an edge. You can be able to be in control, because the Fibonacci is a mathematical formula that gives you vital information that you need in predicting the future movements of prices, okay? Because the Fibonacci exposes significant levels to you. It allows you to know retracement levels. It allows you to know extension levels, okay? So if you want to know more about this tool, grab your pen, grab your book, and let's get on to today's teaching. Okay, so starting out, what is the Fibonacci? Okay, it's important to note, right, that the Fibonacci is a retracement and an extension tool. Let's just go ahead and write that out. That it's a retracement and an extension tool. Okay, that is, the Fibonacci can be used to identify retracement levels, and it can also be used to identify extension levels. Okay, what are these extension levels? Extension levels are basically levels in the direction of trend. Okay, so contrary to what a lot of people think, a Fibonacci is not only a retracement levels. Yes, there are retracement levels, which I'm going to be exposing you to, and yes, there are also extension levels, which I'm going to be exposing you to. So a Fibonacci, right, can allow us to know where a retracement might be ending. How is it going to allow us to know where a retracement might be ending? Okay, if you look at the screen, you would see that there are some retracement numbers right here. We can see the 23.6. This is a Fibonacci retracement level. We can see the 38.2 Fibonacci retracement level. We can see the 50.0. We can see the 61.8, and we can see the 78.6. All of these levels are Fibonacci retracement levels. Okay, that is, all of these levels are levels where if prices is, for example, selling for a retracement and it gets to any of these levels, it can bounce back up. Okay, price could get to the 23.6 and end the retracement and bounce back up in the direction of trend. Okay, but now, what are the most significant levels when it comes to the Fibonacci? Okay, the 23.6 is not a very strong level, because usually prices depends a bit more. Okay, so that's why we don't consider the 23.6 as a very strong Fibonacci level. That is, prices could come to 23.6 and it could pretend as if it wants to bounce up, only to drop back to 38.2 and even go a bit further. Okay, so that's why we don't pick trades with the 23.6, because it's not a very strong Fibonacci level. Yes, you could go onto your chart, right, and see that there could be times where price will be selling for a retracement, get to a Fibonacci level and bounce back up. Yes, there could be that time that the 23.6 could reject prices. However, we don't pick trades at that level, because it's a low probability trade. Okay, and as you guys know, we only pick high probability trades in the Forex market, and that's what has allowed us to have significant wins and stay profitable for so many years. Okay, so that is that about that. Okay, so what is the next thing? The next thing is the 38.2 level. The 38.2 level is also not a very strong level. Okay, and it doesn't give us the highest probability trades. So at 38.2, price can actually bounce off this level after selling for a retracement and push back up in the direction of trend. However, it's not a very strong level and we don't depend on it. Same with the 50.0 also, it's not a very strong level and we don't pick trades or depend on it. Okay, if I'm putting my hard earned money on the line, I want to make sure that price is rejecting at the strongest levels that I expect price to reject. Now, what are the strongest levels? The strongest levels are what? The 61.8. Okay, so when I see prices selling for a retracement at 61.8, I can be able to place my buy entry, look for the last higher low, place my stop loss, and buy in the direction of trend. Okay, like I said, these are retracement levels. So basically, it means that what all of these bearish movements right here are identified as retracements. They will end at 61.8. Then what do? We buy beautifully in the direction of trend. Okay, so 61.8 is a very strong Fibonacci retracement level. In fact, we also call it the golden zone, because most of the times prices will reject at this particular golden zone. Okay, but beyond the 61.8, there's also another level known as the 78.6. The 78.6 is an incredible level whereby we also execute entries on after prices, sell for a retracement, and we see price at these levels, we know that what there's a high probability that this level will hold, and we can be able to place a buy opportunity. So either 61 point or 78.6 are very, very strong Fibonacci retracement levels. Okay, so anytime you're trading the other Fibonacci levels, you don't have to watch out for them, but watch out for the 61.8. It could end a retracement and give you an opportunity in the direction of trend, either buy or sell, so fight in the direction of trend. Watch out for 78.6 also. They could give you an opportunity also in the direction of trend. You understand? So those two levels are very significant when it comes to the Fibonacci retracement. Okay, so now how about when it comes to the Fibonacci extension? When it comes to the Fibonacci extension, what are the extension levels? It's important to note that we have 3 extension levels when it comes to the Fibonacci extension. Okay, so what are the levels? We have this level here that is written as 1. Okay, on your MetaTrader to be written as 100.0. So I prefer to use 100.0. Yes, it's rounded up as 1, but I prefer to use 100.0. Okay, so here we can see the 100.0 extension level, we can see the 161 point extension level, and we can see the 261.8 extension level. So these are the 3 extension levels that are significant when it comes to the Fibonacci. Okay, so now this means that what if I'm taking a trade, right? For example, I'm selling and the sell is in the direction of trend. Okay, I'm selling and it's a trade in the direction of trend, right? What am I going to do? When prices get to this level that is 100.0, I could decide to take my profits, because like I said, the Fibonacci allows us to know, okay, this is where a retracement might end, or this is where an extension might end. So in this case, I'm selling in an extension. What does Fibonacci allows me to do? It allows me to know that what there's a high probability that the sales are going to end here. Okay, so what am I going to do? I'm going to take profit, or I'm going to break even and see if prices is going to stretch to 161.8. Okay, in fact, I don't go beyond the 161.8. So these two are my most significant extension levels. Okay, I don't use the 261.8 because 261.8 is a bit of a fast stretch. So anything around 100.0 or 161, I like to take my profits. You understand? I take my profits, I walk away, and I wait for the next trade entry opportunity. So either of these levels, 100.0 or 161.8, are very, very significant levels. Okay, so for those of you that have been wanting to join our academy, it's important to note that we have also started teaching for the year. Link is in the description below. Okay, you will see the link directly at the description where you can directly join the academy or even join the free platform, either or, where you can be able to learn from me and I can be able to hold you by the hand to the understanding and mastery of every single aspect of price action trading, where you can be able to stand alone, become a professional, and make money by yourself. Okay, so let's get on to the teaching. So like we said, right, the 100.0, 161.8 are very, very significant levels that when prices on an extension, we take profits. Okay, so very briefly, I'm going to show you how to identify these levels on the chart, just using real life trade entry opportunities. For example, this is the 1 hour time frame and we are on GBP JPY. Okay, and these are like fresh opportunities for the week. These are like fresh opportunities. The first opportunity, how did we trade the first opportunity where we made so much money, the previous week? How did we make so much money? We brought out the Fibonacci from the low. You have to bring your Fibonacci from the swing low, bring it to the swing high right here. This is the highest point. I always make sure it touches it pinpoint, and you can see clear that price is rejected at the 61.8. You can see a pinpoint rejection at the 61.8, allowing us to know that all of these sales actually were retracement. All of these sales were retracement because JPY is bullish. It's in the direction of trend. So when prices sold for this retracement, what the prices do? It came down to the 61.8 for what? To hit the Fibonacci level. And when it hit the Fibonacci level at 61.8, what the prices do? It took off very clearly from there. Okay, so for those of you following me, you know the entire story of this particular trade, but let me just bring it out again for educational purposes. Okay, so first of all, this was the highest level as at that point. Then we saw prices trade this particular structures here, where we saw price made push, exhaustion, and clear bearish structures, right? Push, exhaustion. Then we saw prices made a push to this level, that is a potential reversal area. Then we saw prices had a change of character here. The last lower I was taking off, then price had a change of character. So when price had a change of character, I knew that what, we are up, we are coming right here. However, what do? We don't buy pinpoint. What do? We allow prices to make a retracement. All of these sales are nothing but retracement, and at the end of the retracement, which is either 61 at 61 points or at 17.6, we are able to place in our buy trade and shoot in the direction of trend. Okay, so first of all, let me make it clear where the change of character happened. You can see the last lower I got taken off, then all of this were the retracement. Then what did I do? I simply came here from the low to the high. You know, I always love to make my eye as pinpoint as I can. Okay, just a moment. Let me make it very, very pinpoint, you know, as much as I can. Yes, very beautiful. So at 61.8, what did I do? I basically just placed in my entry at 61.8, placed in my stop loss at the last higher low right here. The last higher low must be below 78.6. Why? Because price can actually still come down to as much as 78.6. So my stop loss must not be at 78.6. It must be below the last higher low, which must be below 78.6, which is around this particular level right here. You can see the last higher low here. Okay, this is the last higher low right here, and we can see prices trade, you know, my stop loss below, and somewhere around here, pinpoint 61.8, stop loss around here, and we were able to place the trade and make significant profit of about 1 to 3 risk to reward. 1 to 3. Imagine putting $10,000 on this trade, you go with $30,000. Imagine putting $1,000, you go with $3,000 plus. Okay, so this is how beautiful we trade, and this is how we've been able to stay profitable and consistent over the year. Okay, so after prices hit take profit at this point, what did prices do? Prices, you know, sold down again for a retracement, just like we said, right? GBP/JPY is what? GBP/JPY is entirely bullish, right? So prices sold down again for a retracement, but first of all, it had created a new high right here. This was not the highest point of rejection. Then we now saw prices. Okay, we saw prices. Let me expand it a bit. We saw prices give a change of character right here. Okay, the last higher low got taken off right here. This is where the change of character happened. I can put it change of character. Okay, so when prices sold for the change of character, what did prices do? Okay, within this particular structure, okay, I've taught structure circles severally, and my students know about structure circle. If you want to know about structure circle, link it in the description below where you can join my academy. I'm going to hold you by the hand through the mastery of structure circle. In fact, you need the knowledge of structure circles to be able to use the Fibonacci correctly. Okay, so what are structure circles? From here, right, we saw prices make all of these movements, all of these are push, all of these are exhaustion. And after this, what did we see prices do? Price started small structure. So a new structure started here, which is what all these small structures right here of push, exhaustion, push, exhaustion, push, exhaustion. Then there's a push right here, and there's a change of character. Okay, so what structure has been affected? It is the structure that starts from here. So I'll put it as CSC. Okay, it is the structure that starts from this low, and it is the structure that starts from this high. These are the structures that have been affected. It has no business with the structures that are lower, and it has no business with the structures that are higher than this level. So this is my range of focus, and my business is currently within this window for me to pick a trade entry opportunity. So what am I going to do? Okay, I'm going to what? I'm going to bring out my Fibonacci again in order for me to identify. I know that what? Okay, there's been a break. There's been a change of character and prices are sold. Okay, where is my level that is going to end the retracement? Since we said the Fibonacci allows us to know where a retracement might be ending, right? So we'll bring the Fibonacci from the low here to the high point right here. Okay, some of you might want to use the high point right here, but because that is just a, you know, they are just, it's just a week, I prefer to use something, you know, with a bit of body right here. Okay, so now what is happening right here? Here we can see prices at the 78.6, rejecting the 78.6. Okay, allowing us to know that what there's a high probability that retracement has ended at this 78.6. So what am I going to do? At this 78.6, I'll just place in my buy pinpoint at the 78.6, hide my stop loss below the last higher low right here, then place my buy in the very beautiful direction on trend right here for about a 1:3.6 risk to reward. It is an excellent trade that we can all pick as soon as the market opens. Yes, market has traded a little bit above, you know, this means that from pinpoint entry right here, we should still be able to see 1:2.8 risk to reward. However, from market opening, market could actually gap back to this level and still give us our 1:3.9 risk to reward. So this is a very beautiful trade, and this is how we're able to use the Fibonacci tool to make excellent trades in the Forex market. If you want to learn more, link is in the description below. Let me be your mentor. Let me hold you by the hand. And I also want you to be profitable from now to many more years to come. See you guys in the next teaching.